Okay, for this last example related to process costing, I'm going to incorporate another variable, and that is that we have spoilage. So you'll remember in the two previous examples, everything that was worked on was either deemed to be a good product and moved on, or a good product and remained in work in process to be completed the next period. In this example, and this example comes from the material in chapter 18, we're going to assume that although we may have worked on in 12,000 units during the month, we had some spoilage and we were unable to complete and transfer out the entire amount. And so we need to account for that spoilage. Now, spoilage is deemed typically to be either normal or abnormal. And the assumption here is everybody expects that there will be some spoilage, there will be some defect. The idea is, how much do we anticipate, how much do we accept from a management perspective? That's considered normal spoilage. And so normal spoilage is typically rolled into cost of goods sold under the assumption that if I expect to lose 10% of my product, the cost of the 90% that is good should be the cost of all of it. On the other hand, abnormal spoilage is spoilage that exceeds that acceptable level. And typically abnormal spoilage is highlighted as a separate line item because from a management perspective, you want to be able to minimize that. And if it's rolled up into cost of goods sold, you lose sight of what is happening over and above what is anticipated. So what I've done, the totally different example, none of these numbers relate to the previous examples. So what we have here is a beginning work in process the month of April, let's say, of 2,400 units. We had $21,240 in materials that have been added already in previous months to those units, and $13,332 in conversion costs. Now, during the month of April, we started 12,000 units. We completed and transferred out 10,800 good units. We anticipate, or from a management perspective, we accept normal spoilage to be 10% of the good units, and work in process at the end of April was 2,160. In terms of costs, we incurred additional costs in April of $97,560, $111,408 in conversion costs. Beginning WIP was deemed to be 100% complete as it related to direct materials, 50% complete as it related to conversion costs. Again, this doesn't really play in because we're only focusing on the weighted average approach. Ending WIP is deemed to be 100% complete as it relates to direct materials, and 75% complete as it relates to conversion costs. One other piece of information, and that is that we detect spoilage at the end of the process. That's important because what that means is that the units, even those units that were not good, went through the entire process, and therefore the equivalent units of spoiled units is equal to the physical units. Okay, so moving into the calculation for equivalent units, we have 2,400 units in beginning WIP. We started 12,000 units. So we have 14,400 units that we need to account for. And what that means is, of those 14,400, each of those units either was good and transferred out with spoilage, or was sitting in work in process at the end of April. So here's what we know. Based on the data, we had 10,800 units that were completed and transferred out because they were good. Normal spoilage is defined as 10% of those good units. So we have 1,080 units that would have been normal spoilage, the 10% of the 10,800. We also have 360 units that's abnormal. And the way in which we know that is we have 14,400 units that we have to account for. If we back out the good units, back out the normal spoilage, and back out ending WIP, that does not leave us with 0. That leaves us with 360 units. So that abnormal spoilage is effectively a plug. Okay, now, and then if we add all that up, of course, it equals the 14,400. It should, since we plugged the abnormal spoilage. In terms of calculating equivalent units, again, good units completed, they're completed, so they're 100%, they've incurred 100% of the cost, so equivalent units and physical units are the same. That's also going to be true for the normal spoilage and abnormal spoilage, and we know that, again, because the spoilage is not detected at the end of the process. Let's say that instead we do a quality control check halfway through. We may be able to actually identify the spoilage halfway through and not run them through the entire process. So it all depends on when you run your quality control. In our case, we're keeping it simple and indicating that we don't do that until the end. So that means that normal spoilage and abnormal spoilage equivalent units are equal to physical units. WIP at the end of April, however, will be based on our percentages complete. Materials, we are 100% complete, so equivalent unit and physical units for materials is equal. But if you notice, equivalent units for conversion costs is equal to 75% of the physical units. Then we'll just, as we did in the previous examples, add those up, and we have 14,400 equivalent units for material costs and 13,860 for conversion costs. The next couple of steps are exactly the same as we did before. We will take our total costs, so we have our costs from beginning inventory, and we have the additional costs that we added during the month. We will total those up, which gives us 118,800 for materials, 124,740 for conversion costs, and we will calculate our cost per equivalent unit. For materials, that's the 118,800 divided by the 14,400 equivalent units. For the conversion costs, it is the 124,740 divided by the 13,860 in conversion costs. And so we have a cost per equivalent unit for materials of 8.25 and for conversion costs of 9. Now, the last step is really the same process. The only difference is we have those two separate line items, normal spoilage and abnormal spoilage. We've calculated these the same way we did before by taking the cost per equivalent unit by the equivalent unit for each line item. So 8.25 times 10.8 for good units complete, $9 times 10.8 for the conversion costs for good units complete. Normal spoilage, 8.25 times 1,080 for materials, $9 times 1,080 for conversion costs. Now, you will notice that I've come up with a subtotal here that includes costs for good units completed and normal spoilage. That is because that normal spoilage will get rolled into the cost of the good units. So when we transfer these costs either to the next department or to finished goods, we will transfer the total 204,930, not just the 186,300. Then the abnormal spoilage is going to be the 8 1/4 times the 360 for materials, the $9 times the 360 for conversion costs, and then ending WIP will be the 8 1/4 times the 2,160 for materials, and the 9 times 1,620 for conversion costs. And then all we do, just like we did before, and total all of those up to make sure that we allocated the same as costs to account for. Now, our journal entry, let's just assume for ease that this is the only department. And so we're going to debit finished goods for the 204,930, which is, again, the cost of the good units plus the normal spoilage. Then we're going to debit an account called loss on abnormal spoilage for the 6,210. That is going to go, that's an income statement account. It will be a separate line item, thereby highlighting the fact that our spoilage is over and above what we want it to be. And then we'll credit WIP for the sum of those, thereby leaving in WIP the 32,400 associated with WIP.